The inflation print in the US came in at 9.1%. What on God's green earth is going on? Deflation is now a real risk. How is that even possible with core inflation at over 5%? As expected, Celsius has filed for Chapter 11 bankruptcy protection. What does this mean? And is the worst of the Three Arrows and Anchor Luna driven contagion finally over? In the meantime, Ethereum is driving crypto higher. It looks like the merge may finally happen in September. What does this mean for you? ETH 2.0 staking is live on Abra and is already taking off. How does it work? Has DeFi really been the market savior many think it is? Well, we'll take a look. All this and our AAA, Ask Abra Anything. All right, it's time for Money Talks. All right, another crazy week in the world of macro crypto world events. Last week it was Japan. This week it's Sri Lanka. The number of countries nearing debt defaults looks to be in the 20 range. This is going to lead to protests, potentially riots, and I actually think it's going to lead to money printing in the US, which I'll explain when we get into the inflation discussion. Really, really interesting take from my friend Arthur Hayes this morning, who's been on top of this like a fly on fly paper. So we'll get into all of that. And as I reminded you all last week, the entire team at Abra is here as your trusted partner for all things crypto. Right? Many of you have been testing us, moving funds from other services over to Abra. We thank you very much. And you've also been testing us by testing our withdrawal processes and then redepositing. Thank you very much. In every case, we're here for you. But I want to address just head on, again, the turmoil in the market and the news regarding Celsius, Voyager, and others. The cowboys are dropping like flies. Abra, on the other hand, has experienced incredible growth as a company, and I have great conviction for us and the future of crypto. We all know, again, I've said it many times, crypto is subject to extreme volatility. You don't have to invest more than you care to lose because with extreme volatility comes obviously extreme short-term risks. There's no reason to over leverage yourself. And having a partner like Abra that's financially secure, has sound risk management practices that I've been talking about every single week, and has personalized service for every private client is essential. That's why Abra is considered by many to be the best company for helping you manage this crypto wealth space and all of the complexities that go along with it. We're not here to give you investment advice. We're here to help you figure out what to do for yourself and then do it. We have rigorous credit underwriting, rigorous risk management and trading policies. Our yield and lending operations are in a very strong position. You've all heard me talk about our risk policies for the past 2+ years. It's this commitment to excellence that has enabled our rapid growth in a safe and responsible manner. We're also aware of the issues, as I said, facing our competitors. I believe that the cowboy mentality of CeFi is done. Thank God, good riddance. Abra had no exposure to these companies, and we have no relationship with them. Many of you have come to us asking for help. How can we help you if you have exposure to Celsius, Voyager, some of the other companies that have died? The answer is we're looking into it. We are. We've spoken to other firms that work on recovery of lost funds. No promises. It's something we're looking at. As I said last week, we've had more meetings on it this week. It is going to take time, but we would like to help if we can. It's possible we can't, I have to be honest. But if we can help, I would like to help. Okay. All right. So I want to talk about the market updates. Crazy what's going on right now. The macro story is driving crypto. There is no doubt about it. A few months ago, I might have said it's unclear what's going on. Are we really at a protracted bear market? It seems like structural bull market. Look, everyone underestimated the rate at which credit tightening would happen. People associate Fed funds rates with credit tightening. Okay, it's not exactly true, but it's a good barometer. It's a very complex discussion. Okay, the inflation print in the US came in at 9.1%. So as I asked earlier, what on God's green earth is going on here? The consumer price index increased to 9.1% from a year ago in June, above the 8.8% Dow Jones estimate. So if you exclude food, energy, core CPI rose 5.9% compared with the 5.7% estimate. Costs surged for gasoline, groceries, rent, dental care. Adjusted for inflation, workers' hourly wages actually fell 1% during the month and are down 3.6%, again, on an inflation-adjusted basis from a year ago. Now, all of this aside, I believe that deflation is now a real risk. How is that even possible, right? With core inflation at over 9%, actually core inflation at over like 5%, and the big ticket print at over 9%. Remember, inflation prints are trailing indicators. As I said, we're currently experiencing the fastest credit tightening in history. Oil prices have come way down, along with many commodity prices, right? Supply chains are really backed up. There is a huge oversupply within global supply chains. Watch, if you shop at large department stores, look for huge discounts coming. I'm telling you it's coming. Why? Why would huge discounts be coming in an inflationary environment? Because inventory levels are through the roof. As soon as you see that, say to yourself, wait a minute, Bill said big inflation, lots of inventory leading to discounts. That probably means that recession is either here or on the way. Now, I think recession is here. I think it's been here for a few weeks. I think we're in the second quarter of a recession now, the way at least I would define it. I am not a government official, so they can say whatever they want, but I do believe that we're going to have a 3 to 4 quarter recession by my standards. By government standards, they'll probably call it a quick 2-quarter recession, right? Starting this quarter, going into Q4. We'll see. I was on a Twitter Spaces with Raul Paul of Real Vision, who, as I mentioned last week, is going to be on Money Talk soon. I got the date wrong. It's, I believe, the 29th. So, and by the way, we have a really interesting guest next week, which I'll get into when we talk about DeFi in a few minutes. Okay. This Twitter Spaces was really interesting for a few reasons. Raul's base case is really overlapping with mine, and we'll get into this when he's on the show. And I think things will have evolved a little bit between now and then. But basically, right, the tightening of financial conditions caused by commodities, rates, and the dollar is the largest in history. That's the past, right? It's not, the Goldman Sachs has this financial conditions index, which many macroeconomists look to get a feel for where we are. And in this case, it doesn't actually fully capture the situation. I've talked to you about the ISM, Institute for Supply Chain Manufacturing. Their index, generally, if it's below 45, we're in recession. The S&P 500 tracks that very closely and is currently pricing the ISM at 46, which says we're at or very close to recession now. Bonds are freaking out as collateral is getting liquidated all over the place in traditional markets. This happened back in 2008, post-Lehman, and it looked for a while like bonds were going to lead us out of this, but then the economy broke. And it looks like that's exactly what's happening right now. All right. Anyway, so it looks like what's going to happen here is a couple of things. One, right, I believe that we're going to be looking for a Fed cut, right? Why? Well, as I said, you're going to get to the point where there's simply too much supply. People are going to stop buying. It's going to push us into a recession. Unemployment is going to skyrocket in Q4, in my opinion. Watch for that. Maybe Q1, sometime between back to school, end of winter, big spike in not only inventories, but also unemployment. Now, the actual unemployment number isn't the most important number. It's the rate of change of unemployment. Look for the rates that these numbers change to give you the short-term story. Okay. If you go back all the way to 1970, every time this ISM hit 50, the Fed had to pause or cut rates every time. So this ISM, which I talk about almost every week now, is the key variable. We're going to get into this with Raul when he comes on because I want to understand the history of this. But right now, it doesn't matter. All I'm telling you is the facts are the facts. And the facts are this has led every time. In many cases, when the Fed paused, CPI was still elevated or hadn't even peaked. Inflation is not the leading indicator here. It is the trailing indicator. If the Fed says inflation is at 9.1%, that's 6 weeks ago. It's not today. All right. So many of us have been expecting peak yields, but this has not happened. All right. The rate of change of 2-year yields is unprecedented in all of recorded history. Nothing like this credit tightening has ever happened. Okay. This is unsustainable. The US economy has to break at some point. You can't raise rates and increase credit tightening this fast in a model where we have this much unsustainable debt without something breaking. All right, before I get off my why is macro so important soapbox, I'm going to relate it to crypto in a minute, but I want to talk about another point here, which I think is really important for crypto. By far, the most important factor driving crypto prices are two things, right? Consumer adoption of the technology and money supply. Now, money supply has actually been creating a lot of consumer adoption. And as I said, the money supply has been tightening dramatically. Now, for those of you under the age of 35, this is really the first time that as an adult, you've experienced a drop in money supply. So this is a new experience for you. I believe that the money supply is about to increase dramatically, not only for the reasons I just described, but also because our international brethren are in deep trouble, right? In Japan and in the EU, for the euro, right? Those currencies, right, are tanking. The dollar is going through the roof. This is creating big structural problems. Japan and the European Union are both trying to engage what we call yield curve control. And Arthur Hayes wrote an amazing article about this morning. They're doing this either explicitly or implicitly. Yield curve control is when a central bank engages in price fixing, which they might call manipulation to us non-banker types, as Arthur wrote, of their government bond yields. The central bank prints fiat currency, they print their money, and then they purchase their own bonds to artificially cap yields. The US started engaging in this for the first time in its history during the last 15 years. Remember, when the price of a bond goes up, the yield or effective interest rate goes down. Right? So you want to buy the bonds to drive the price up, to make the interest rates go down, to make money cheaper. Hopefully that makes sense. But this intervention weakens the domestic currency. Now, in the case of the dollar, that's what you want because it will help support our international brethren. So how does this work? The central bank, as I said, you should really read Arthur's article on this. Fantastic. All right. So the central bank caps yield on one or more of their government bond maturities, meaning they arbitrarily decide what they want the rate to be. They get ready to print money, which expands the money supply, right? And then they use that money to purchase bonds in quantities sufficient to reduce the yields to below the cap. If the market believes the yield should be higher than the yield curve control cap, then the central bank simply starts printing money until it either purchases all of the bonds or the market stops demanding a higher yield. This process massively expands the money supply and thereby weakens the fiat currency. In other words, for you, what it means is that there's going to be more quantitative easing, which is more or less the primary reason why all risk on assets have been priced up for the better part of 15 years. So in other words, the Fed has no choice but to support not only our dollar, but international markets in order to avoid a US-driven contagion, which could create a global depression. So look for the following. We just posted the link in the live chat for those of you watching on a stream. Right? The US is committed to defeating Russia. I think we all believe that. And primarily using economic sanctions, meaning we don't want to start invading and hand-to-hand combat with the Russians. Right? This also means that our allies, the US allies, have to refrain from purchasing Russian food and energy, which is another problem. Japan and the EU have to pursue yield curve control at the same time to save their banking and political systems, as I just described. So that's part one and part two. Part three, the inflation driven by yield curve control is exacerbated by Russian food and energy sanctions. But to keep their populations from revolting, Japan and the European Union need help from the US to reduce their domestic inflation, because the dollar is, right, the global reserve currency. So if America is to do right by her allies and avoid a global catastrophe, she has to find a way to print dollars and purchase Japanese and EU bonds, or at least reduce the divergence in policy rates by starting to cut the federal funds rate, which is a problem right now because of inflation in the US. So printing dollars to buy Japanese and European bonds or cutting the Fed funds rate weakens the dollar and will add trillions worth of liquidity to the financial system. So this fiat money will find its way into all risk assets, including crypto. Primarily crypto from a, let's call it a price, increase perspective. I think crypto actually is most likely to be the best performing asset of the next 10 years. And this is a big reason why. Okay, so sorry for the long explanation. It's super interesting times. I think if you combine what Raul's been saying with what Arthur's been talking about, and he points to some macroeconomists that have been helping him with this thesis that I'm aware of who are super interesting. Basically, you have to be patient for the next 18 months. Don't try to time the bottom. That's not, I personally am not trying to time the bottom. I'm happy to keep buying crypto and certain tech stocks at these levels. Some are buying bonds. It's not my thing. I'm not a bond trader anymore. My bond trading days are over. I used to work in bond trading at Goldman. But here's our thesis as to how we basically get back to, as Arthur calls it, party time, or game on, as I've been calling it for the last few weeks. Okay, so enough of that. Hopefully you found that interesting. I certainly did. And the Twitter spaces that I was on with Raul a couple of days ago, if you go to the Real Vision Twitter feed, I think there's a link to it. It's super interesting. All right, so let's talk about, I'm seeing a bunch of questions, by the way. Let's do a country check. Just given everything going on in the world, I see some of you have posted your country. Would love to get a feel for where everybody's joining from. Yeah, all right. So, by the way, no teleprompter. I'm actually, I have a few notes, but I'm not reading. So I would be horrible if I was reading. Okay. So, all right. Celsius. Obviously, a few of you have been asking me to comment on Celsius. I talked about it during the opening monologue. Celsius, as expected, filed for Chapter 11 bankruptcy protection. My understanding is that I'm not a bankruptcy lawyer, but that basically allows you to continue operations on behalf of your customers while effectively seeking court protection from creditors. And yeah, so let's see. I've got some notes here. My understanding, look, what happened with Celsius and sorry, let me turn off my notifications so it doesn't annoy all of us. What happened with Celsius and what happened with Voyager are very different, right? My understanding is Voyager basically had all their big eggs in one basket, and they had huge exposure to Three Arrows, which had a huge exposure to Anchor, which was a DeFi protocol. And that basically leveraged exposure to Anchor, brought down both Voyager, as well as created a hole for several other funds, including Genesis, which, as I understand it, filled that hole by internal balance sheet transfer from their parent company, DCG. Now, in the case of Celsius, they claim that they were exposed to Anchor, but actually pulled the funds before it dropped. Based upon their court filings, that actually appears to be true. It would appear that most of the losses from Celsius come from a few interesting places. Number one, they lent themselves something like $400 to $500 million or more to basically get into the mining business. And when they say they lent themselves, they use their clients' money to do that. And to me, this just seems absolutely nutty, crazy, insane. Pick your favorite expletive. But that's what they did. They also appear to have lost about $350 million in certain DeFi transactions, which you may have read about via the KeFi lawsuit, which was a company that they were working with to partner on generating DeFi-based returns. And we'll talk about DeFi in a minute. Absolutely nothing wrong with using DeFi for generating returns, but you have to have risk management processes commensurate with what you're doing. And if you don't understand what the company that is doing that you're engaging with to generate DeFi returns, you're going to generate losses. Okay. Anyway, the company has hired a restructuring firm. It's laid off a big chunk of its employees. It's unwound about $1 billion worth of loans and DeFi positions over the past month or so. And there still seems to be about a $1 to $2 billion hole in their balance sheet, which forced them into bankruptcy. My take is that the last of these kind of cowboy-driven CeFi contagion, company-driven companies is done. I'm not aware of any other dominoes left to fall at this point. I do have some concerns about some of the smaller exchanges and some of their practices. But again, that's not generally a Three Arrows contagion-driven issue. I think that's more of a long-term structural issue. So I'm happy to answer any questions about what's going on with Celsius as we get into it. But as you all know, Abra is not Celsius. We don't operate with a cowboy mentality. This whole narrative of banks are not your friends was clearly not the decision upon which you should be making your own crypto deposit conditions. Okay. All right. So let me see here. So I want to talk about CeFi versus DeFi for a few minutes. Okay. I lost my mouse here. Hopefully I didn't lose my connection. So let me know if you can still hear me. Hopefully everything's good here. Okay. All right. Everything's fine. So I want to talk about CeFi versus DeFi for a couple of minutes. All right. So there's been a lot social media, in the news, that DeFi worked perfectly while actually there was one article, I think it was in the Wall Street Journal, that actually got it completely wrong, where they were talking about what this whole thing was a DeFi mess. That's wrong. Okay. Then there was a bunch of articles and comments in social media where DeFi was the big winner here because it worked perfectly, while CeFi cowboys like those running Voyager and Celsius were the ones that really caused this mess. Also incorrect, right? So rewind all the way back to the beginning of this year, and it's individual people, right? Individuals via potentially funds or other means, which is centralized, putting money into Anchor. Now, as far as I can tell, there's no centralized off switch for Anchor. Anchor was a DeFi protocol managing billions. We tested it. We decided that it wasn't working for us. Too much risk. So we stopped the test, right? Total DeFi system. So I was having a back and forth with a bunch of the podcasters. Many of you know them, who cover DeFi and singing its praises. It's working perfectly. And by the way, we are going to have somebody on next week who represents the DeFi space, and we're going to get into this. So. And by the way, when I refer to CeFi cowboys, it's not certainly a knock to our friends in Texas. So it's a knock to our friends who have poor risk management. Okay, just to be clear, big fan of Texas. So all jokes aside, look, it's not a CeFi problem. It's not a DeFi problem, right? DeFi is early. There's been billions of dollars in losses related to hacks and other issues with DeFi, and DPEGs related to what happened with Anchor, okay? And there's been hundreds of millions, and in some cases, billions of losses related to CeFi via poor risk management. So to say, it's all on one or all on the other, it's not true. Ultimately, this comes down to people, whether it's people doing risk management, in the case of a lender, people writing code, in the case of, a DeFi smart contract. It all comes down to people ultimately, and people doing the right thing. Okay. All right. So I've lost my prompters here. I have no connection whatsoever. I know you can hear me. Hopefully the video's working. But I've been told the video's working, the audio's working, but I have no access to my feeds here. So I'm going to wing it for the next few minutes and talk about what do I want to talk about? I want to talk about the merge. Okay, so next we're going to talk about the Ethereum 2.0 merge. So I don't have the tweet in front of me. I don't want to use my phone, but it looks like the core developers for Ethereum, or a big group of them, got together. I don't know if it was yesterday or the day before, and they agreed that the merge looks like it should happen on September 19th. What does that mean for all of us? Well, it means that the migration to proof of stake is about 2 months away. Now, it's been 2 years coming, so I Hey gang, sorry about that. I had to my laptop reboot itself, which is what I was afraid was going to happen when I froze. But hopefully you can all hear me now and see me now. I have my chat window here, so if somebody can just let me know if we're all good. Yeah, so hopefully you were all talking to each other via the live stream here. Anyway, sorry about that. So where was I? I was talking about the merge, and it looks like we're going to have the Ethereum merge on September 19th, unless there's a delay in the meantime. Somebody who represents the developer community had a really interesting kind of tweet storm that they published. Not a tweet storm, but just a summary. His name is superfizz.eth. You can check him out. He's a part of the Ethereum dev community. But basically, they're going to do the client releases at the end of July, announce on the 28th, 29th. They're going to basically do the merge on the 11th. And then the mainnet merge is going to happen on around August 18th, and then around August 19th, the mainnet merge will be live. If you can't follow all of that, you can just go check out the Twitter updates if you're so inclined. Okay, so this is good news. I think that this is what is driving the crypto markets right now. So basically, one of three things is going on right now. I was just checking out the charts before the show this morning. One of three things is going on. Either there's expectations that the economy is going to slow, which is why we're bouncing, and I don't think that's the case. Either we're in a range-bound channel on Ethereum and Bitcoin, which is certainly possible, right? Ethereum and Bitcoin have been in this range since mid-June, and it's now mid-July. And Ethereum is approaching the top of that channel, which would be a little under 1,300. Okay. Now, if Ethereum breaks 1,300 with a clear break, I believe it's breaking because of the merge, and it's leading the way, meaning it's leading the way for crypto markets higher. And then whether that bounce is sustainable will depend upon these money supply issues that I talked about earlier on the show. Okay. If it doesn't look like money supply is going to be increasing, or expectations for money supply increasing aren't happening, then I don't see Ethereum breaking 2,000. But if there are expectations that credit is going to be loosening, then I fully expect Ethereum to go on a rapid, methodical march to 3,000 and beyond. Okay. And I do believe that Ethereum could easily lead the way for the markets higher here. All right. So anyhow, so that's what's going on with the Ethereum merge. I talked about a little bit about CeFi versus DeFi. Dan Moorhead, who runs Pantera, had a very interesting newsletter this month, and the title of his newsletter was "DeFi Worked Great." Now, okay, as I said, we're going to have a special guest next week. I'm a big fan of his, and I'm not going. I'll talk about it towards the end of the show. But yeah, look, so certain DeFi systems, Aave, Compound, Uniswap, MakerDAO, have functioned flawlessly until now. They've had issues in the past, but I'm talking about in the very recent past. Okay, they have worked well. But let's be clear. Okay, Anchor was a DeFi protocol, and I can give you a list of DeFi protocols over the last year that have had problems, and along with amounts, right? Badger DAO, right? Let's see, I can remember them offhand. Vulcan, Compound had $150 million loss going back to 21, right? Ronin, everybody remember that? That was like $500 million, right? Then there was, of course, Poly, which I think was like over 500 million. So DeFi is not without problems. And this year alone, the losses have probably been over, I don't know, 3 to 4 billion, I would guess, as it relates to DeFi vulnerabilities. Probably more, actually, right? But again, this is the price we pay for being early. Anybody remember Wormhole? Right? So anyway, I'm not railing on DeFi. I believe DeFi is the future of banking. I really do. And I believe Abra is going to be using DeFi more and more in the coming years. But we have to recognize where we are as a space. CeFi and crypto is early. DeFi and crypto is early. Okay. All right. So I want to spend a couple of weeks on this topic of CeFi versus DeFi because I believe it directly affects all of you. If you're using CPerks, you're using something that is effectively DeFi, right? Abra didn't create CPerks, right? We were given a grant by a foundation which is centralized, but they created effectively a decentralized currency. How does all of this CeFi versus DeFi affect your money in the future? It's something that I really want to dig into over the next few weeks. All right. We'll talk about how some of these other protocols failed. We'll talk about how I think they're going to stabilize in the coming months and years, and what that means for the future of banking and your money, and how it's going to be managed. I think there's going to be a convergence in developing markets, frontier markets, Western markets, and they're all going to basically use similar banking rails going forward. Okay, so enough of that. I have my show briefing back so I can remind myself what's next. So I'm going to do a few minutes. We'll do a shorter AAA today. So tee up your questions. And I don't know if I've got compatriots. I think I'm alone for the AAA today. I know Deepak's in the middle of a major product release cycle here. So I think I'm on my own. I'll see him later today and tell him about all your great questions. So, all right. So let me get into some questions. Obviously, the number one question that I'm getting right now is what's going on with CPerks? When is Abra going to be turning on CPerks for trading? All right, so I can tell you what the process is. I can't give you the exact dates. So in a few weeks, we are turning on a new trading system for our international users. It should happen, and by international, I generally mean outside the US. Sorry for being so US-centric. But outside the US, we'll be turning on a new trading system sometime in August. And then a few weeks after that, we'll be turning it on for US users. As part of that migration to the new trading system, eventually you'll see a new market order system that I've been telling you about this year, followed by limit orders, and then followed by CPerks trading. Okay, so it will definitely be this year, or I shouldn't say definitely. The plan is for it to be this year. We're also working on the CPerks Abra Perks. I got to get my Abra names right. My Abra Perks 2.0 plan is looking good. Okay, it's integrated with our American Express card product, our new trading system, and a bunch of other really cool things that Deepak and Willie's engineering team are working on. Really excited about it. They're getting very close on the web stuff as well. So all of this stuff is actually related. It doesn't sound like it, but getting you back to CPerks trading is related to all these other things I'm talking about. And the team is just working like mad to get it all done, but get it done in a responsible way. All right. Good question on Pax Gold, Pax G. I believe that's Pax Gold. If it's not, let me know and I'll look it up. But I believe that's Pax G. I'd love to list it. I think it's a really cool idea. I have to check on our custodian to see if we can support it. Now, one of the really cool things about this migration to our new trading system is we'll be able to list a lot more coins a lot faster over time. Not immediately, but over time. So, for example, like Solana and some of the other top coins, like eventually, USD or Binance USD. We'll be able to list these things that right now are a little problematic. Okay. All right. So that's cool. Big fan of trying to get some gold coins into Abra as well. Dave asked, what's the benefit of moving ETH to ETH2 and earn now? Will we begin earning 4% right away if we move now? Dave, yes, you will get the effective rate right away if you move. The key difference between ETH2 and ETH in Abra is that with ETH2, you're actually staking ETH. Now, the advantage of that is you're not lending it to anyone to earn the yield. You are lending it. You're lending it to a validator pool, right? But you're not actually lending it to a third party who's then expected to pay it back to you. It's actually just sitting in the validator pool, right? And then eventually you get the ETH back, and along the way you earn the yield. The downside, of course, is you won't be able to withdraw the ETH2 until about a year after the merge. So based upon the dates I gave you earlier, it would be locked up till sometime around October 1 of next year, potentially. Could be longer, but that's, probably right. All right. Whereas with just normal Abra earn ETH positions, you have access to the funds in near real time. You can withdraw them anytime you want. Most withdrawals take 1 or 2 days, but we have up to 7 days. Okay. So that's the big difference. But yes, you earn the 4% right away. Okay. So hopefully that makes sense. And by the way, we've had a lot of you migrate to ETH2 or ETH staking. That's great. We've had a lot of, mostly it's new deposits coming in for people staking, not moving from ETH to ETH2, but you can move as well. That's no problem. You just have to withdraw the ETH back to Abra Trade and then redeposit it into ETH2 in Abra Earn. So hopefully that makes sense. All right. Let's see. So Paul asks, are there any plans to link the, I'm reading from the bottom now, I shouldn't do that, but I like the question, so I'll read it. So Paul asks, are there any plans to link the Amex credit card to 0% microloans at the point of sale? That is a great question. That's something that I would probably do outside the US first before doing it in the US. Let me explain. So in the US, I don't need to use the crypto to give you credit instantly via a credit card, because as a bank, Abra or our banking partner can issue the credit to you instantly, which is how the card is going to work out of the gate. Now, yes, eventually we would like to use your crypto balance to give you a micro loan at the point of sale. Now, for non-Americans, most of you don't have access to lines of credit via credit cards via your bank. You have to use debit cards. So the idea that I could give you a microloan against your crypto balance that's accessible via credit card is a big deal. It's something that I've talked about on Money Talks. I talked about it during many public speeches I've given, where I think the future of the purchase-based credits for non-US consumers is going to be crypto-backed credit at the point of sale, using existing credit card networks like American Express, Visa, MasterCard, et cetera, et cetera. So I'm super excited about that. And as many of you know, my background is in working in frontier markets on money transfer and payments and using technology, which I think is really interesting. Let's see. Let me go back up here for a minute, come back to the bottom of the list here. A bunch of Texas comments. So, by the way, I've spent a lot of time in Texas the last couple of years. I really love it. I used to go to San Antonio a lot, and I was working with a lot of the Mexican communities in San Antonio, in Austin, Houston, and really got to know and love the different parts of the state. Obviously, it's a huge state. So, but let's see. So, more questions about C-Perks, trading I talked about. Let's see. We talked about, here's an interesting idea. Can we ask Rahul if we can get a Real Vision as a perk? Well, actually, the Real Vision crypto is free, so you don't need that as a perk. And the Real Vision core subscription, I think, is like $100 a year. We can ask him. That's a good idea. So you should ask him when he comes on Money Talks. And Raul's recent macro thesis is very enlightening and seems similar to your thesis, Ryan. Absolutely. I learned so much from Raul. I also, the people that I really learn from right now, I would say Kathy Wood. I think she gets a terrible rap. She is not a short-term trader. She is a long-term, thesis-driven investor, and I think she's right over the long term. I think many of her investments are going to go 50 to 100x. So whether she's wrong by 30% in the short term makes no difference to me. I think Raul Paul is brilliant and has amazing clarity of thoughts. I think Peter Diamandis, who has also a fantastic exponential growth perspective is also brilliant. So the common thread here is I look for people who really get exponential thinking and understand the impact of technology on society and macroeconomics, and try to integrate that and their perspective into my long-term thinking, and then look for clues about the short term, right? I personally don't do short-term trading anymore, with some few exceptions. If I think, things are really breaking and the models are just telling me there's free money there. But by and large, I'm a long-term holder, and I look for opportunities for my long-term holdings that are driven by, this thesis I have about exponential technologies leading us into the future. Okay. All right. So hopefully that makes sense. But yes, I agree with your comments on Raul. He's great. All right, let's see. So I'm going to take one more question. I apologize for the tech snafu today. That was on me. I need to get I'm going to do a system upgrade here. And we've been talking about it, but I think today was the last straw. So let's see what else. Oh, by the way, I wanted to talk about next week's guest, right? So I mentioned earlier in the comments about CeFi versus DeFi. And so we're going to have the founder of Compound on the show, and his name is Rob Leshner. If you don't follow Rob on Twitter, you should. He's great. Now, he's been railing against CeFi the last few weeks. It's one of the reasons I wanted him on, is I wanted to have an open, honest conversation of DeFi versus DeFi, and how you all should think about it, and versus, how I think about it and he thinks about it, and basically just give us all the information we can about what's working and have an honest conversation about what hasn't worked. All right, let's see. So somebody's asking me, was partnering with CPerks a good thing for Abra? 100%. Look, I can turn it off anytime I want, right? If I basically feel like CPerks is not working for us, I would just turn it off. I would say, okay, it failed. You can go sell it on Uniswap. No problem. I'm holding a bunch. I could sell it on Uniswap. I could look for other projects that the Crypto Banking Alliance is supporting and hold it and see if it's useful. So yeah, I actually am super bullish on it. Look, we've been at it for a few months. This is a multi-year thing for us. If you are looking to make a short-term quick buck on CPerks, you should probably stop listening to Money Talks, because you're going to be disappointed. Okay, let me repeat that. If you are looking to make a short-term quick buck on CPerks, you are going to be disappointed. If you are interested in a long-term plan that uses CPerks to try to create a new type of crypto banking economy, then keep watching, because that's what I'm interested in. Right? I'm not interested in people getting a quick $10, right, by trading CPerks. Now, if you want to do that, I don't have a problem with that. I'm totally fine with that. And as I said, CPerks trading is probably going to be live by the end of the year. And at that point, you can have at it. And if you want to sell your CPerks, go right ahead. But that's not why I'm doing this. All right. So if you're looking for a quick buck, Abra is probably not the place for you. If you're looking to understand the future of banking, how Abra is going to make it happen for all of us, how we're going to democratize access to these services, Abra is the place for you. All right. Last question. Desktop app. Yes, Big Tech Son. I talked about that earlier. We do have an Abra web interface coming. It looks beautiful. I'm really excited about it. And I believe we're on track for late Q3, and we will see. I already answered the question on PAX-G. And then there was a question about whether CPerks is used in Abra Prime. I wouldn't say used in Abra Prime is the right way to say it. I would say it would be, CPerks would be available eventually to Abra Prime customers. Okay, it's not available right now. We don't have any advantages for Prime customers versus retail, just to be clear. Okay, I'm going to stop there and hope that you'll forgive me for the tech snafus, and hopefully for the podcast, we'll be able to edit out the delay. Okay. All right. In the meantime, thanks for joining us. And hopefully you're all being smart and safe with your crypto dollars. If you have questions about how to act responsibly, how to move funds over to Abra, we have real-time support in the app. You can call us via the 800 number in the app. Our team is here to help. Okay. In the meantime, have a fantastic weekend, and we'll see you next week on Money Talks. Take care, everyone.